Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 6th, 2025, and we're diving into the first quarter earnings report of Bright Horizons, a leader in early education and child care services. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Bright Horizons has shown some impressive numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Bright Horizons reported a revenue of $666 million for the first quarter of 2025, marking a 7% increase from the previous year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by enrollment gains and tuition price increases at their centers. Additionally, there's been increased utilization of their backup care and educational advisory services, which has significantly contributed to the top line.
And what about profitability? The net income has more than doubled compared to last year.
Indeed, net income surged by 124% to $38 million. This is largely due to higher income from operations, lower interest expenses, and a reduced effective tax rate. The company's strategic focus on expanding its service offerings and optimizing costs has clearly paid off.
EPS performance and analyst expectations. Now let's talk about earnings per share. Bright Horizons reported an adjusted EPS of 77 cents, significantly beating the analyst forecast of 52 cents. John, what does this tell us about the company's performance?
This is a substantial beat, with the adjusted EPS exceeding expectations by nearly 48%. It highlights the company's strong operational execution and ability to manage costs effectively. The fact that only 3 analysts were covering this forecast might have contributed to the conservative estimates, but Bright Horizons has clearly outperformed.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Bright Horizons reported an adjusted EBITDA of $92 million, a 23% increase. How is the company achieving these efficiencies?
The increase in adjusted EBITDA is attributed to higher contributions from both the backup care and full-service center-based childcare segments. The company is effectively leveraging its scale and optimizing its service delivery, which is reflected in these numbers.
And looking ahead, what does the guidance for 2025 tell us?
Bright Horizons has set a revenue guidance range of $2.865 billion to $2.915 billion, and an EPS range of $3.95 to $4.50 for the full year. This strong guidance indicates confidence in their growth strategy and market position, despite macroeconomic uncertainties.
CEO insights and strategic initiatives. Let's hear from the leadership. CEO Stephen Kramer mentioned the company's focus on delivering high-quality education and care. How does this align with their strategic initiatives?
Stephen Kramer emphasized the company's commitment to high-quality service, which is central to their strategy. By deepening their impact across clients and communities, Bright Horizons is not only enhancing its market position, but also ensuring sustainable growth. Their unique model and exceptional team are key drivers of this strong execution.
Key takeaways. In summary, Bright Horizons has delivered a robust performance in the first quarter of 2025, with significant growth in revenue and profitability. Their strategic focus and operational efficiencies have set a strong foundation for the year ahead. John, any final thoughts on their investment prospects?
Bright Horizons is well-positioned for continued growth, with strong financials and a clear strategic direction. Investors should keep an eye on their execution in the coming quarters, especially given the positive guidance for 2025.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Bright Horizons' performance in the comments below.